you always at every moment in time have to make sure that power demand and power supply are equal. If you don't, then you can risk a brownout or a blackout or something like that, right? And that's the only thing. So that's why people say storage and batteries or whatever it is, very important for the grid. I would say to you though, we're going to have storage everywhere. And I'll explain why. First and foremost, there's lots of storage there already, right? If I look at it, we actually have storage in the electricity system for over 100 years. We've got pumped storage systems, lead acid batteries as backup, and we've got a whole pile of different chemistries that are available for storing this electricity and moving things around, okay? The second thing I would just say to you is lithium ion batteries are already everywhere, right? So we're used to batteries, right? I counted 150 in my home, right? So they come in all shapes and sizes, okay? The third thing is that lithium ion is also taking over from lead acid. So lead acid has been around for over 100 years. We now are at the point where lead acid, lithium ion batteries are cheaper than lead acid. What that means is all those lead acid batteries that are in starter packs in our cars, they will be replaced by lithium ion. Backup batteries that are lead acid, they'll also go lithium ion. So we're going to a situation where we're replacing these batteries with lithium ion batteries. And the other advantage that lithium ion have is it's lighter. Take a lead acid battery, you want to power your mobile phone, you're suddenly carrying around whatever, maybe 10 kilograms of weight, okay? That's the difference in power density between a lithium ion battery and a lead acid battery, okay? Next thing I would say is that we're also, even though lithium ion batteries have been in our mobile devices for the last 10 years, if I give you an idea, there's probably 30 gigawatt hours of batteries that are used in the consumer device area. And actually, if I went back 3 years ago, the global market for batteries was probably about 60 gigawatt hours. Now we've got 100 gigawatt hours of batteries going just into the EVs, okay? Because a car takes 50 kilowatt hours of batteries. That's a normal size car today, right? So the market is ginormous for this, and we're only at the beginning. That's why you see on the right side, the ramp up in batteries over the next decade is really ginormous. And you can see the market, it's all about cars. Even if I put in stationary storage, buses, these markets are small compared to the automobile. It's all about automobile going forward. And again, what you see is very clear path to reducing costs even lower than what they are today. And the reason is just alone mass production. And the next interesting thing, though, is going forward is how can you decrease pricing going forward? What can happen? I want to show you the graph on the right here. The graph on the right is that you see the solid state batteries 2025. The idea being these are high power and energy density batteries which enable you to get more range. Well, I just want to tell you, I put the graph down and I said 2025 NEO, which is the Chinese Tesla. They actually just announced at the weekend that they will have one within production within the next 2 years. And this is 1,000-kilometer range, and they're talking of batteries that have energy density, watt hours per kilogram, in and around 360. Okay, and I say this just in terms of the speed of change in this industry. It is phenomenal, really, what's happening there. The next thing I would say is what also lithium-ion batteries do is they bring the utility and the automobile value chains together. Just realize that batteries are only used 5% of the cars are only used 5% of the time. That means I could actually use that car battery for something else. I could use it in home, I could use it in the grid. And you might say, oh, that's not going to happen. It's a pain in the backside to me. That's not true. I'm sorry. You plug the car in, you don't really care what it does. All you want to make sure is that you have the power to get home or wherever you want to go. But if somebody pays you because they want to use that electricity in the car, why would you let them? And the numbers are pretty enormous. So you have 1 million Teslas on the road. It's 100 gigawatt hours of power. It's the peak power needs of Germany and Netherlands together, right? Really substantial numbers. Why would I not use it? Of course I will. The next thing to say as well is that there will also be lots of low-cost batteries out there. One is just because what's going to happen is mass production of these batteries going forward, lithium ion. The second thing is what I call second life. And second life means what happens is these batteries with wear and tear, you lose range in the car. And depending on the region you're in, you have to replace them when they get to maybe 80 or 70% of their original range. Now, Volkswagen, this is the ID3, just came out. Volkswagen have sort of said, well, that's very good. What can we do with that battery at the end? Well, you have two choices. You can recycle it, or you can say, well, I can second life it. I can use it in other applications. So Volkswagen have designed it. So They can take the battery out of that car and they can immediately use it somewhere else. So where would you use it? You might use it in the home. You might use it in a stationary storage application in the power grid, right? They've designed it for that. And then the idea is then when after that happens, after the battery can be used for whatever period of time it is, then you can recycle it, okay? But this is the thinking that we've gone to, right? Second life batteries, low cost, high performance. The final thing I'd say to you in storage is digitalization enables it. What does that mean? The energy system that we have at present, it's not very well connected. So what normally happens is if you're a grid operator, what you do is you predict what demand is going to be, and then you change supply to match that demand on a daily basis. This is what the grid operator does. That's a pretty silly system, right? You sort of say, well, why would you not sort of, if you digitalize that, then actually what you could allow to happen is, and I'm doing this in my own home, is that when I've got a sunny day, guess what happens? My power will be powered, and my car will be powered by that sun, right? That's the type of thing. Now take that to a system level, and you can see what happens, right? You allow devices to be connected together, and you allow the flexibility in that system to be used as storage. And I see this very clearly happening in the next few years. So let me just stop there, and if there's any questions, I'll gladly take them before I go on to the next section. And I'll give you a few minutes maybe to put in some questions here, and then I'll see if I can answer them. So just, I got one question in here, which I will read to you, and I'll answer this now. Given that the levelized cost of energy does not represent total cost of electricity delivered to customers, and given that dependence on wind speed and solar radiation impact CV and health LCOE, can wind and or solar be cheaper than conventional generation all over the world? That's a very good question, Gherkin. And I give you my view on this. My view on it is we have to change the way we think about electricity. And what I would say is, you think, why do we have the system that we have, where you have 60 hertz in the US with 50 hertz in Europe, is because ultimately this was a decision that was made 125 years ago. And what we decided was the system was have base load, and then you would have peak load power. For me, that is a thing of the past. I think we have to change the way we think and think, what is the lowest cost form of energy? And by the way, the lowest cost form of energy always becomes the core of a system. So the reason we had base load and peak load was base load was coal and peak load was gas. That's ultimately the way the system worked. And you had a little bit of nuclear depending on the country. My view actually is that the renewables becomes the new base load. And then what the whole system then is built in and around what goes on there. You make sure that demand and supply balance, et cetera, et cetera. And that requires substantial change in the way we think about electricity. And it also requires substantial digitalization. That's what I would say, Gherkin, as an answer to that. I've got another question here, which is, and I'll read out to you. This is from Benjamin Wehrman. You assume a constant supply of raw material inputs for construction, battery grids, etc. Aren't there any sourcing risks that could thwart your calculations? Benjamin, I'm going to come to that later on. But what I would say to you is you're right. And the issue is not that these materials are not there. The issue actually I would be concerned about is that we are not investing in the mines that need to actually take these materials out. So we talk about rare earth metals. They're actually not rare. Okay, there's a lot of them out there, but actually they're difficult to process and they're difficult to mine. Different story. And the concern I would definitely have is because if you think of the automobile industry, they've been used to, if you're Ford or GM, you've been buying your steel from US Steel Corporation for the last 100 years. Germany, they've been buying it from ThyssenKrupp. And now you're sort of telling them, actually go and get your hands on lithium, get your hands on rare earth metal. It's a new world for these guys. And I definitely do see a need for investments to take place in this area. But what I'm clear though is the materials are there. There's no issue with the materials. I think we should be worried about that we have to take these materials out of the ground sustainably. And secondly, that, as I said, that the capital goes into this area. So just if there's any, I don't know if there's any more questions. Oh, there is a few more. So let me just go through them here. In considering the overall cost of electrification, are you taking into account the substantial investment that we made in transmission? This is from Janet Barth. I'm not Janet. You're right. I only looked at the cost of actually of generation, and you're 100% right. There needs to be an investment in not just the transmission grid, but also the distribution grid. And again, I would go back to and say it's also the digitalization of this grid. And I'd say it's really, really critical because if you think you're a grid operator today or a utility that has grids, how do you earn a return? Well, you earn a return by passing the cost of your upgrades onto the customer. And you've got a monopoly position. That's a very interesting because that doesn't, what you normally don't want to do is do the most efficient solution. What you want to do is the most expensive one, right? Because you get your investors get a return on it. So I think we really have to look at how we incentivize grid operators going forward. But I would say the investment, not just in transmission and distribution, it is a very, again, I'm looking in the environment where we have to kick off our economies again. It's a very good way of doing this. But it's also, this is an opportunity also to, again, to re-digitalize our world, right? That's what I would say. I think we really have to think of it as a little bit bigger picture. And it's not just about strengthening the grid, it is enabling the decarbonization of heat, the decarbonization of transport, and it's also at the same time enabling these local communities to benefit from these, new jobs, etc., etc. Next question is, are we anticipating supply chain challenges for minerals and metals that are key components of batteries? No, I would say straight away, Sudhita, we've looked very closely at this as a business. There will be one or two materials that you'd be concerned about. So for example, cobalt, and actually there's a lot of cobalt out there, but the issue is that the lowest cost cobalt comes out of the Democratic Republic of Congo. And there's a huge amount of concerns in terms of political risk and also how it's mined there. But as I said to you, and I speak to the whole industry in this, they are not concerned about the materials that are going into batteries going forward. And I've got John Jimison. What is the new business model for electric utilities that allow them to maintain and grow the grid adequately while interconnecting all of those consumer-owned sources and use of power? John, that's a very, very, very good question. And it's a difficult one to answer because what I would say to you is that each region is very different, right? And each region, and this is just if you take in the US, each state is different, has different regulatory environments, and each country is different as well. If you ask me the business models that really excite me the most, I think would be in and around the retail electricity space. And the retail electricity space is, I sort of look and say, well, what does my utility do? He takes electricity, he gets it from a power generator, and he sells it to me and takes a margin. I look at that and say, well, why am I paying him so much margin? And I do see the I'd say the Amazonization of these retail electricity utilities going forward. I think they're going to be in a lot of pressure. And I think it really does make sense to begin to open up and liberalize a lot of these markets. If I look in terms of innovation that I see in the utility space, most of it's taken place in Europe. And actually, I look at and say even one market in particular, if I look at UK, really at the forefront of innovation in and around liberalizing their markets to allow decarbonization to take place. I think that's the market we need to look at. Then I think there's a last question, then I'll continue. How would the world deal with the fall in prices caused by the increasing use of electricity, of renewables? Because in the end, this will decrease the incentive to invest in new production technologies. Very good. It's a very good question. We already have this issue in a large part of the world, which is the difference between the wholesale price and the capture price. And that's very true, is that if you think of it on a sunny day in say Italy, power prices are at zero because there's too much sun in the system. And I certainly have the belief that it actually makes no sense to be giving these companies just a flat-based, let's say, subsidy or incentive structure, because you're not incentivizing to deal with the fact that there's too much electricity on that sunny day. And so the question is, how do you do this? It's back to flexibility. The word is flexibility. The system is not flexible. So, you know, the local pool owner cannot take benefit from the fact that power prices are minus in a lot of different countries. I want to go back, maybe as a good example is to the UK. There was a day, Easter Sunday last year, across the whole of Europe, there was minus power prices. In other words, the grid operators were paying people to take the power. There was a UK company called Octopus Energy, and they were offering their customers electricity for free. Okay, that was because that system allowed them the flexibility to do that, and that's the world I think we have to go to. The key word I would say for integrating renewables is flexibility. Okay, so let me talk about what does this mean. So this for me was at the beginning of the year. This is Larry Fink, CEO of BlackRock. He wrote this at the beginning of the end of 2019, and I read it and I thought, yeah, this is very interesting. This is the biggest asset manager in the world, conservative organization, and they're sort of talking about a fundamental reshaping of finance. I just want to read a few things to you on this. Evidence on climate risk is compelling. Investors to reassess core assumptions about modern finance. That's a big statement. Investors to reassess core assumptions about modern finance. Third one, because capital markets pull future risk forward, we will see changes in capital allocation more quickly than we'll see changes to the climate itself. I looked at this and I thought this is going to have a big impact, and I thought it would take 5 years. And then what actually happened was COVID hit. And what COVID did was it suddenly gave the investor a view in and around what peak demand for oil could look like. Okay, that's what it did. And guess what? Oil prices went negative, right? The oil prices going negative was such a scary event for the industry that people go, oh my God, this could happen. At the margin, we could, and it was, don't forget, you know, COVID, what did COVID do? It maybe knocked out 15% of demand for oil. And you saw what happened, negative prices. So this is very interesting. So the oil price thing is also a big change. Now, that's the first point. The second point, though, that happened was this. Capital flowed out of oil and gas into electricity, in particular clean energy producers. So you know, Ørsted is a Danish utility. It's a utility, right? Share price up 40%. You look across big oil last year and their performance, Oxy, leader in shale oil, down 75% year on day, right? Flight of capital away from big oil into big electricity. Next year, it became the biggest utility or biggest energy company in the Western world, okay? But it wasn't just that. What's really interesting for me is this one here. Vestas is the biggest wind company in the world. It's now worth more than the two biggest oil and gas companies together. Schlumberger and Halliburton together. Vestas is worth more than it. Interesting thing also was what happened in terms of energy and mobility stocks, right? You look at EVs, Tesla up 700%. Look at the solar stocks, Sunrun 300%, Jinko 140, SunPower 330, Vestas 90, PNE 90, Siemens Gamesa 80, right? It's pretty amazing what happened in terms of the performance of these stocks. And I think the other thing that you're seeing as well is a commitment from big financial institutions to move away from clean energy. And I actually had one sovereign wealth fund approach me and said, we'd like to put 300 billion euros a year into renewables. How we do it? And I looked at them and went, 300 billion. That's bigger than a whole capex expenditure on renewables in a year. And you want to spend that every year, right? But again, that's one institution. And I just say, lots of money, all wants to go into this. If you look at the infrastructure space, infrastructure really, what are infrastructure investors looking? They're looking for long-term safe returns, right? And usually in the form of dividend. Already, the majority of global infrastructure is going into, you see the three sectors, renewables, grid, and mobility, right? It dwarfs all the others, okay? In terms of whether it's the telephone network, water network, et cetera, et cetera. Capital is there. And the other thing, this is just what's called SPACs, special purpose acquisition companies. the phenomenon has been around before, but what this allows you to do is get to the stock market quicker than you would if you did a normal IPO. And what you've seen is 16, actually there's 17, another one came this morning, 17 companies in the area of electric vehicles that have now gone to market in the US alone. And I just give you, I know there's a lot of numbers there. If you look at the business, a business called QuantumScape, which you can see down, it's about 2/3 day down the chart. It has a 20 billion market cap. Its share price is up 200%. And what QuantumScape does is next generation batteries. This company has no revenues and it has a 20 billion market capitalization. And look at all those numbers. They all are Nikola, 6 billion, Ilion, 2 billion. These are not small businesses, right? These are big businesses that are, and you can look at the share price performance. They've always done well. Again, lots of money out there for this transition. People want to put money into it. And I think I just briefly mentioned this, is that the concern I'd have is the mining area, right? Is that how do we keep up with this demand? I think you can increase production of lithium ion batteries, but can you really get this stuff out of the ground quick enough? Okay. And you can see scramble for nickel and cobalt. Well, I just want to give you some figures. The market for EVs is about 2.5 million this year. Let's assume it goes to 25 million by a decade. And I actually think it's going to be much quicker than that. I think it could be 50 million, right? And there's 100 million cars sold a year. Well, guess what happens? You can see what happens is that already 50% of lithium demand is in batteries. And you will see a 9 times increase in demand by 2030. That means at that point in time, over 90% of demand for global lithium is batteries, okay? Next one is copper. And by the way, I think if you look at commodity prices, copper was one of the best performing last year. And I would assume this trend is going to continue. The reason is today, a normal car has 25 kilograms of copper in it. An electric car has 85 kilograms of it, right? The battery pack is a lot of, just so you know, is a lot of copper in it. And also you've got the motors. And then I'm not including the charging stations or the need to build out the grid, right? You can certainly look at the numbers and go, wow, right? This is, huge impact on the market going forward. Nickel. It is here, and again, 50% of global demand for nickel today, it goes into batteries. And if you look at this going forward, same thing, right? So 90% of global demand by 2030 for nickel would just go into batteries. Now, of course, some of it can be recycled and this, that, and the other thing, but my point is lots of need for mining going forward. So let me just take a stop there and just see if there's any questions on implications for the capital flows. So then there was a question, and I think it's a very good question. Why do we not see adequate market signals for decarbonisation? That's a really difficult question to answer, but I would say to you, what I'm trying to say in that section there is the financial market is now seeing beginnings of adequate market signals for decarbonisation, because they're now looking and saying they're seeing it as risk and opportunity. And I think that's a really big change. They're seeing this as risk and opportunity going forward. Now, you might say, well, that's still not fast enough. So what do we have to do to actually change those market signals? And my own view would be on market signals is that we have to really move away from, I'll call it the Band-Aid approach to decarbonisation, which we have at present, which is we're just throwing subsidies on top of subsidies and rules and regulations. And the system has now got so complicated that it's very difficult to change, right? And so if you want to actually change the system quicker, I think we need to bring in adequate market signals. So adequate market signal for me, the natural thing is a carbon price, I would say. But I know that's difficult to get in different countries. But practically, we need to get rid of the disincentives for decarbonisation, which are in the system today. And I give a very good example of that, is that I live in Germany, which talks a lot about its energy transition, but I pay 30 euro cents per kilowatt hour for my electricity. Natural gas is 7 cents. Why would anyone bother decarbonising their heat at that price. You're not going to do this, right? And economics doesn't work. And actually, you have to ask, well, why is electricity 30 cents in Germany? It's all government regulation, government taxes and regulations that have it that way, right? Why is gas at 7? Government regulation, right? So the incentive structure we really need to get in place, I would say, in this, okay? So I have another one here, which is, that's good that someone doesn't agree with me. The materials are there, but are rare. The rarer they are, the more expensive they become. The key is looking for an alternative and complementary, but cheaper materials. So Joseph, first and foremost, I agree with you that we need to continue looking for alternative and complementary and lower cost materials. And I would say this naturally happens. And I use the example in the solar space, is that if we went back 10 years ago, just the solar industry, obviously the key ingredient is silicon, and we talked about 10 cents a watt. We need 10 cents of silicon, 10 grams of silicon for each watt of power. Now we're down to 3 and 4. Okay, so we become much more efficient at using those existing materials. Number one, and number two, recycling is a big part of that. Okay, so I think those two elements are going to be very more important going forward. In terms of the materials, you didn't say which are not rare, but as I said, of the ones that I've given you, the main ones out there, there's a lot out there, right? And this is, this is what I'm getting from the powers that be out there in this. So very good question. Why is liberalization of markets a necessary step to decarbonisation? So my view is I'm talking about innovation. Where do I see innovation? I think there's a need for innovation within this energy space. If I look over the last 100 years, what has changed in terms of how we manage the system? Okay, right? What real innovation have we seen in the system? Very little. Where we have seen innovation is where you've liberalized markets. That's what we've seen, without a doubt. And I only see this when I see, and I'm working at money flows in and around this space. I see a lot of people, again, I use the example of Britain, looking at Britain, the Japanese looking at the Chinese, looking at the Koreans, investing in there. Why? Because they look and say, actually, what they're doing in terms of how they're decarbonizing is a very good way. They're letting the market do this, they're creating competition, which in turn creates innovation. That would be what I would say to that. Next one is 2020 share price comparisons are probably not that valuable given the bizarreness of 2020. Still, increase in share price of clean energy is noteworthy, but how can we distinguish between the intrinsic value versus market hype? Gherkin, it's a good question, and I would look at the valuations of some of the companies, and they're mind-boggling, right? And as a former sell-side analyst, if you just take the valuation of Tesla today, I mean, it's you can justify it, but it's it's hard to justify, I would say, right? But that's not just them. I gave you the example of QuantumScape there, 20 billion market cap, has no way. So there's no doubt there's hype in the sector. Having said that, I think that's also what happens in technology areas, right? And we've seen this in the dot-com boom and bust. Out of the boom came Amazon and such businesses. And actually out of the bust came Amazon and companies like this. And I see the same thing happening in this space. And what I say to businesses is, and sometimes you have to use the financial markets before it uses you. And what you are definitely saying, I use the example of Plug Power, which is a fuel cell company in the US. This company's used the fact that there's hype in fuel cells to raise $3 billion, okay? That puts it in a very strong situation to actually go and make acquisitions and to take a long-term view in and around it. So my own view is, I'm very glad that the capital is there because it helps push this transition going forward. But there's no doubt it's there's going to be money lost in this transition going forward, okay? And there's another one here from Benjamin. Given investors scramble to get out of big oil, does this mean we're finally going to see the big carbon bubble burst anytime soon? I don't think so, because I give you my view. Big oil won't go away, right? Oil is too valuable. I look around my room, we look at all the plastics that we have. I would say to you that oil is too valuable to burn. That's what it is. It's too valuable to burn. So that's what I would say going forward. But I will come to that in a second. In the last section, let me talk a little bit about the oil area. And I have another follow-up. This is from Gherkin. How dependent is market interest in clean energy and policy support? Gherkin, the good news is it's becoming less so. It certainly has been. And I would say the first, if I think of myself from 2015 to 2020, I would look at what renewable companies have done is they've been just chasing subsidies. That's what they've been doing. But you're now in a completely different market environment where they're also looking and saying, actually, how do I integrate this into the power system? Do I need a power purchase agreement? Oh, is there other ways I can do this? So there's a change in the way they do this. There's also a change in the investors, because the infrastructure investors have been completely spoiled by subsidies, right? It's been really easy for them. Now they're actually changing and thinking, well, how can I do it? Now, the difficulty in all of this is still, it's back to the whole thing of the wholesale price versus the capture price, right? Why would I invest in solar when basically I have a risk that on a sunny day in southern Italy, my power is going to be curtailed because it's too much more power on the system? And I think that's one of the key things that we need is a power market reform. We really need to think about how do we, from a physical point of view and from an economic point of view, better integrate more amounts of renewables into the system. And as I said, this is doable, but I'm not seeing people really sort of looking at it. And then one question about the prospects for hydrogen as an energy carrier. I've no doubt, if you think of it, hydrogen is all around us, right? If you think of all the fuels we burn, methane, whatever, there's hydrogen in it, right? The question is, how big a part of the future system is hydrogen going to be? My own view is that what we should be doing is electrifying as much as we can. And what we can't electrify, what we will do is we will take electricity and we will convert it into some form of fuel. And it could well be that that fuel is hydrogen. It could well be that fuel is ammonia. It could be some other form of e-fuels. No doubt about this, right? What is clear to me, though, is that there is a lot of hype in and around hydrogen at present. Again, I didn't show you the fuel cell valuations of companies, but these are mind-boggling, really. And I used to cover these as a sell-side analyst. I find it very difficult to justify the valuations that are out there at present. And there's a huge amount of hype, because particularly in Europe, because we've got European Union, German government, UK government talking about hydrogen strategies and this, that, and the other thing. And it's, as I said, it's going to be very interesting to see what happens going forward. I think from a technological point of view, what I'm not seeing is the technology innovation that I'm seeing in other areas. So if I compare it to solar, I'm not seeing that same level of innovation in the hydrogen space. I'm not seeing the same level of innovation that I'm seeing in the battery space. That would be the other concern I would have on this. But there's no doubt, look, that there is a role for it going forward. Okay. Jeanette, if we think that subsidies distort the market for renewables, don't oil and gas subsidies, mostly tax, also distort the market? Without a doubt. Sorry, yeah, of course, absolutely. So it's about incentive structures. Incentive structures are wrong, okay? And the question is, how do we make it a level playing field? And there's no doubt that oil and gas subsidies really distort the market. Where will we come out on an even play? Well, if you come out in an even play, look, so if you ask me today, if I was, ask me, maybe ask it another way, if you ask me today, if I had to set up an energy system somewhere, how would I do it? What was the cheapest way I do it? Well, I would go straight away to electricity. That's what I would do, right? I wouldn't go near oil and gas, thing, right? That's the level playing field. The question is how you do that, and that's I mean, we can talk about this again, but that's I think is very interesting thing to talk about how we would do this. And the last question, then I'll finish it here. The change in capital flows towards electricity and renewables has not been obvious in developing countries in South and Southern Asia. Example, new coal, natural gas prices. Do you expect a strong, you mentioned, to extend to these markets in the near future? Yeah. So let's take the example, if I may, of India. India has a huge, big coal rollout plan going forward. I don't believe it will happen. Okay, I'll make that say, I do not believe it will happen. Why won't it happen? Because they have a unique opportunity, because the level of sun that they have, to actually transform their economy. Because if I go back in time, in really big steps forward in economic progress have been largely caused by innovations in energy, right? And I maybe just give it a practical example is I come from Ireland. Ireland and Britain were at one point the same country. Britain had coal, Ireland didn't, right? Really, that was the, you know, and what ended up happening, economic development of Scotland, England, Wales, Ireland didn't develop. Simple as that, right? And I go back 20th century, if you look at the success of the United States in the 20th century, it's built on internal combustion engine and oil and gas. Saudi Arabia, Russia, same thing. That's like energy is so important, and I think India has this great opportunity, and I hope they take it. Obviously, you look at other countries, Malaysia, Indonesia, stuff like this. There is no doubt there's distortions in the market. Why are they going coal? They're going coal often place because there are, you know, Chinese are often going in and financing these for these power plants. I think in Pakistan you could see that the Chinese go in and finance it for them, right, for political reasons, which distorts the market. So there's no doubt it's not plain sailing in terms of economics doesn't always win in the short term. I think in the long run it does. Okay. So let me just finish. So what do I say here? Well, my point would be, what does it mean for the future? I'd say, first and foremost, there's an opportunity to create global champions as at the start of the 20th century. And I put them, Daimler, Bosch from Germany, General Electric, Ford, ExxonMobil, GM. These companies have been global leaders for over 120 years, some of them, right? And they came out of the internal combustion engine and the oil area, right? And I think we are in the same moment today. Opportunity greatness. And maybe I give an example of this that's happening already. Is the biggest battery producer in the world is a company called CATL. It's a Chinese company, right? And it's got a market capitalization of 150 billion, right? Now, in the Western world, we don't have any of this, right? But the Chinese recognize opportunity creates a global champion. Tesla, global champion, right? That's the opportunity that we have in this space. The second point I would say is that this revolution will cause a major shift in the wealth of regions and nations, right? So regions, even within a continent, right? You can look at it and say, actually, if you're in the southern part of Europe, southern part of the United States, you've got a competitive advantage because you're Texas, you're Italy, you're Spain. You've got an advantage because guess what? You've got better wind resources, better solar resources, lower cost energy, and it's clean. But it's even beyond that. It is because you've been, if I look at the German automobile industry, really difficult for it to change, right? They've 100 years of building up a culture of how to do things. And then suddenly in comes this South African-led Tesla, and they change the world, right? It's really difficult for them to change. Then on the other side, guess what you've got is different resources. So oil is not maybe the material of the 20th century, maybe it's lithium. So if you're Chile today, you're in a great place, right? They've got copper as well, okay? So suddenly in a very interesting way. Or it could well be we take what China's doing and saying, well, we want to dominate the production of these technologies because they're going to change our world. And they do. Dominate the production of lithium-ion batteries and solar, right? Two critical technologies and all this, the Chinese dominate. Third thing is, it's really difficult for incumbents to survive. The reason is they're too slow to change and they just don't have the culture. And that's why, again, I go back to the liberalization of the market. I think it's very important because if you don't have competition, you don't change, right? Competition forces you to change. Kodak invented the digital camera and went back, right? And it's the greatest example of this. Kodak could not understand the possible business models from digital cameras, all right? Facebook did. The other thing then is just, well, what happens to these oil and gas companies? Well, I think first and foremost, the ones that survive have the low cost of production, right? So if you're Saudi Arabia, you're probably in a good situation, okay? And you will see oil and gas companies look at their portfolios and say, actually, I'm not going to put that money to work there because I need to have $60 oil before it works. And they're all cutting their long-term price predictions for oil, and they're also increasing their carbon pricing. So the result of this then is what you're probably going to see is a lot of them sort of saying, we're going to do something else for ourselves. And I look, some of them, and I take the example of Shell, BP, Total, they're all sort of looking and saying, actually, we're going to try and change our business model. We're going to try and go into electricity. We're going to do something differently. We're going to go into mobility. What's really interesting is that you're looking at ExxonMobil, Chevron, they're doing the opposite. They're sort of saying, no, we're just going to focus on being an oil and gas company. Why? Because we're really good at it and we believe we can be low cost. And this point is very interesting. Why can they be low cost? Because you've got shale in the US and they look and say there's going to be a whole pile of restructuring in there. We should focus on getting in there and getting our hands on the best assets, the lowest prices, and then we're in this low cost of production area, right? That I can see this. Shell, BP don't have that opportunity. They're not big in US shale. And actually what they've been really doing is big projects that are very expensive and require high price. You can see why they have to change, right? But it's really interesting to see the changes going on in the space. Now, what I would say to you is you might see something radical. This is Volkswagen. Volkswagen has set up a utility. It's called Elli. And so in Germany today, what they want to be able to do is sell you a car and deliver you electricity. So go back to liberalization. Well, Volkswagen is not going to go to Minnesota to do this because guess what? They can't do it because, yeah, well, the regulations don't allow it. So again, I say liberalization allows this type of thing to happen. So I can see radical things like Volkswagen becoming a utility going forward or supplying electricity. So let me stop there. If you have questions, I'll gladly answer them. Thank you very much for taking the time here. And just any other questions? Benjamin, in answer, yes, I'll send these slides, no problem. Let me PDF it and then I'll send it across to you, no problem whatsoever. So Gherkin, liberalization has not been easy in the past. How hopeful are you? It depends on the country, depends on the region. So Japanese are liberalizing their markets and the Chinese are too. And that's two big countries, in particular China doing this is really big. I don't think you're going to do it in the US. If I look in the US, every state is different. Some states will, some states won't. It's very political, and it's difficult to change. I think India also. I think India has to reform its power markets in a very substantial way because there's a huge amount of inefficiencies in it. You've obviously got blackouts taking place in parts of the country, and you've got a real issue and distortion in terms of who pays for what within the system. So I think those, I'd be confident about those three in particular. I would say China, India, and Japan. And then let's be clear, a lot of the West of the world is already liberalized, right? Europe is liberalized, and so is Australia. So is large parts of the world are liberalized already. Any other questions? I'll take a question here from Jeanette here. Isn't it tricky to make Isn't it tricky to make compatible regulation to protect consumers and liberalization to allow competition? Yeah, I tell you, maybe my experience would be yes, you're right again, but I would go back to the UK because I think UK has actually done a very good job at this because actually they have a good regulator and they have liberalized markets, but Ofgem, I think it's really good. It's a really sort of smart regulator, and I mean not just in terms of protecting the customer. I have a company, I have a client of mine called SmartWires, who has a very interesting power electronic solution. And this basically, their solution allows you to get more power down existing lines. Well, in most countries, you can't, there's no incentive structure in place for SmartWires technology, but there is in the UK. And again, this is because they decided that we're not just going to incentivize grid operators to build grid, but to actually see if there's lower cost solutions and better ways to do it. And so I think really, it's really critical. I say this from my perspective, looking at this energy space, the electricity space in particular is heavily regulated. And if I had a concern about decarbonization going forward, is that how do we get rid of the regulations that stop change? And it's not an easy thing to do. And most countries, states, what we do is we just add one regulation on top of another, and it's just too complicated. Well, in oil and gas, it's much easier, right? Much easier. It's a global product, and I don't have the regulations in place that actually prevent change. And it's not just in electricity. So again, if I use the example of, say, solar, rooftop solar in the United States is 2 to 3 times more expensive than it is in most of continental Europe. It's because of regulations, okay? So I think the point I would leave with all of you actually is regulations is really important. We need to have very, very good regulators in place, but we need smart regulation. That's what I would say. We need smart regulation, and it's not easy. So where else have I got? The German auto industry will benefit greatly from the EU-China trade deal. Are we expecting this to hamper progress towards electrification? I think the great savior of the German automobile industry is the fact that Volkswagen is the #1 producer still in China, right? And the fact that they have an EU-China trade deal means that we'll have closer cooperation between the two. And if there isn't that cooperation, you can't electrify because there is no serious battery manufacturer in Europe. So if you want to put an electric car on the road in your Volkswagen, there's no manufacturer that can provide you. You have to go to Asia, right? So I actually think that's very, very positive. And I think if I look at the future of the world we're in, we have to cooperate, right? We have a tragedy of the commons, guys. You're economists, right? We have a tragedy of the commons. That's what climate change is. How do we solve it? We have to cooperate together. So I think I'm very hopeful and positive about the EU-China trade deal. John Jimison, the Standard Oil breakup in the US in 1912 showed that the potential for market abuse by such players. Do you see the same potential for abuse of monopoly power among the new 21st century mega businesses and entry? Yeah, John, I could say something pretty sort of outspoken here and say we already have that because a lot of the utilities have monopolies already. So if you have a utility, you really have one client, and that one client is your regulator. And that's much easier than dealing with 5 million customers, is dealing with that one regulator. And that's the concern I have, is that we already have it. That's why I'm pushing as much as I can for liberalization of the electricity market to allow innovative business models and innovations. And the second thing is smart and tough regulation. Eric Wagner, the role of hydrogen, is it going to replace natural gas? No, it's not. It's not going to replace natural gas. I think what is going to happen in the coming years is that what we should do is electrify as much as we can, as I said before. Natural gas is going to stay a part of our system for many, many years to come. And I see, yes, there's no doubt that some of it, we might take some of that. We might use some hydrogen in the space, but the economics of it um, are really sort of, not even just the economics of it, just the economics of sort of taking green electricity and converting it into hydrogen and then putting it somewhere, putting the infrastructure in place to use it somewhere. For me, I mean, this is ludicrous. And I think this thinking, which I'm seeing again, what it's actually doing is blocking decarbonization, because the critical thing in decarbonization is the next decade. And I'm not doubting we will need hydrogen maybe for the last 10, 15%. But what we really have to focus on, what do we have to do in the next 10 years? What are our priorities for decarbonization in the next 10 years? I no doubt I look at hydrogen, I say the one area where I think hydrogen could have a really big impact is in air transport. Uh, I can see air transport, hydrogen together with fuel cells, that makes a huge sense. But that's one of those really difficult to decarbonize sectors. And I think we're away from a technological point of view, so that we're quite far a bit away. And I'm doing it work in that area. So what I can tell you is that we will see the electrification of air transport, but it's batteries is the first step, right? It's going to be these short haul flights. They're going to be done on batteries and stuff like this. The long haul ones are that really difficult to decarbonize sector. Yeah, so Gherkin, you're saying, yeah, a lot of the innovations on the retail side, that's a tricky side. Do you expect to see full real-time power pricing? Pricing, yes. Real-time pricing can happen straight away. No problem. It should be like the stock market, right? I picture a world where, if you think of it, what they call gate closure, which is where the grid operator steps in to make sure that supply and demand meet each other. It's gone from a half an hour to 15 minutes. Sorry, why do I even need this? Sorry, I think in 10 years' time, there will be no such thing as gate closure, because what we will have is power electronics and competition in the market that makes sure we balance the markets. That's where we're going. No need of that grid operator. The grid operator will be there as an operator of last resort, I would say. But the world that we're moving into, where we've got huge amounts of electrically controlled devices connected together, it is impossible for a human being to do that alone, right? So the question is how best to do this. And you're going to automize as much as you can of it. And I would say to you, this is really tricky. I think you said that's a tricky side. The reason it's tricky is because these guys all have monopolies at present, and they're in really comfortable positions. And now you're sort of telling them you need to digitalize and you need to go to real-time pricing. It's really, really tough to do this, right? And they don't have the capabilities and stuff like this. So the question is, how do you do this? Yeah, it's not, that is definitely a challenge going forward. But I think to myself, that's the challenge we should be dealing with right now if you want to decarbonize. How do we bring innovation into this electricity space to allow us to decarbonize as quick as possible? That's the major challenge that we should be dealing with in the next few years. Because if we sort that out, then I think we can decarbonize very, very quickly. And then obviously, second thing is incentive structures. The incentive structures are carbon pricing and this misalignments and tax policies and subsidy policies. Sort these out and let the market decide. The best technology will win. That's I think what will happen going forward. Oh, so nuclear. God, nuclear is if I may say, is the great hope of energy, right? I mean, you look at it, is from a theoretical point of view, it's the perfect form of energy, right? I take this kilogram of uranium, an incredible amount of energy I can take out of it, right? It's amazing. What's really sad for me is, if I think the last 20 years, the nuclear industry across the world has basically committed suicide. And they can't blame it on other people, it's themselves, right? First and foremost, they've done a very bad marketing job of themselves. So young people don't want to go and work in these industries. People think nuclear, oh, that's missiles, isn't it? That's defense, that's army, oh, that's, you know. And the second thing that people have in their head is Fukushima. Some of them have Hiroshima in their head. And generally people are scared stiff of it. That's number one. But also really bad is just from an economics point of view what you've done. So if you think nobody has built a nuclear power plant on time or in budget in the last decade, including the Chinese, right? Nobody's done it. But just you realize that. So then you look at that and go, well, why would I build these things? They're just too, and is it going to really help me decarbonize? Because if we sat today and said, Bruno, let's do a nuclear power station today, and we want to do it anywhere in the world, it'll take us over 10 years, right? 10 years. Okay, so we want to do a gigawatt power station, it's going to take 10 years. If you and me sat down tomorrow and said, we're going to do a gigawatt of solar, I guarantee we could get it done in a year. No problem whatsoever, beginning to end. You and me, without experience, could do it. Now, that's the issue that the industry has. Now, should we give up on nuclear? Definitely not. Again, it's from a theoretical point of view, it's a dream. And we should invest in our scientists and our innovators in the hope that we come up with a next generation technology which is lower cost and safer. Because if we do that, that's a silver bullet, right? Hope that answers your question, Bruno. Anything else? But just maybe finally, what I'd say to you is, if you have any follow-up questions or anything like that, you can reach, the easiest way to reach me is through LinkedIn. You can send me a message or something like that if you want to connect with me, or if you just follow-up questions. I'll gladly engage with you. For me, it's, as I said to you, I think it's really critical the next decade in terms of decarbonisation. And what I want to do as a finance guy is really bring the experience that I have to people like yourselves and to regulators, because I don't believe this transition is going to happen fast enough without significant change in this area. And as I said, if I can bring any of that experience to help any of you guys in your work, feel free to reach out to me. Dave, maybe back over to you. I presume this is the end.
I think so. Gerard, thank you so much. You know, so much to cover in this topic of energy transition and finance. It is a topic that is here with us to stay, and we're very grateful for your time today and your expertise. As a reminder to those listening, this has been recorded, will be available on our Rewind, and we encourage you to share it with your friends and colleagues. Again, a good plug for IAEE. You can visit us at www.iaee.org. We welcome you to join. Gerard, thank you once again, and I officially close this webinar.